welcome back to the channel. If you're new here, please subscribe and like the video. If you have any suggestions or topics you'd like me to make a video on, feel free to comment below. I hope these videos are helping you. Let's get started. The money in trading isn't made in the trading itself. That sounds backwards, doesn't it? You'd think the more you trade, the more opportunities you have to make money. But that's the trap that catches almost everyone who tries to make a living from this business. The real money, the kind that builds wealth and pays your bills year after year, comes from sitting still. It comes from holding a position when you're right and letting the market do the work. Think about it this way. You do your analysis. You find a stock that's showing strength, breaking out of a proper base, with volume confirming the move. You buy your position. The next day, you're up 3%. The day after that, 5%. Your account is growing. You're feeling good. And then something happens inside your head. You start getting nervous. That profit you're seeing, it feels real now. You can almost touch it. And suddenly all you can think about is protecting it. What if the market turns? What if you give it all back? So you sell. You take your 5% and you feel smart. You feel like you've won. But here's what you don't see. That stock you just sold, it keeps going. A week later, it's up 15%. A month later, 30%. 6 months later, it's doubled. And you're sitting there with your 5%, which after commissions and taxes is maybe 4%, watching a fortune slip away because you couldn't sit still. You couldn't do nothing. You couldn't let the market pay you what it was willing to pay. This happens over and over in this business. Traders cut their flowers and water their weeds, as they say. They take small profits quickly because it feels safe, because it feels like winning. And they hold their losses because they don't want to admit they're wrong, because they keep hoping the position will come back. It's exactly backwards from what you need to do to make a living from trading. When you have a position that's working, when the market is confirming that you were right, that's when you need to sit on your hands. That's when you need to do the hardest thing in trading, nothing. Don't take profits just because you have them. Don't get out just because you're up. Ask yourself one question. Has the reason I entered this trade changed? Is the stock still acting strong? Is the trend still intact? Is the volume still healthy? If the answer is yes, then stay in. Let it run. Let the market pay you what it wants to pay you. The professionals understand this. They know that most of their profits are going to come from a small number of trades. Maybe out of 10 trades, 7 will be small winners or small losers. 2 might be moderate winners. But 1, maybe 1 out of 10, will be a big winner. That one trade will make more than all the others combined, and the only way to catch that big winner is to sit in it, to hold it while it goes from up 5% to up 10% to up 20% and beyond. You can't make a living catching small moves. The commissions will eat you alive. The taxes will eat you alive. The stress will eat you alive. But if you can catch 3 or 4 big moves in a year and really sit in them, really let them develop, you can make a very good living. The market will pay you handsomely if you just let it. But you have to be patient enough to collect what it's offering. You have to be disciplined enough to do nothing when nothing is the right thing to do. And that's harder than any analysis, harder than any system, harder than anything else in this business. When you're wrong in the market, there's only one thing to do: get out. Not tomorrow. Not when it comes back to your entry price. Not when you've had time to think about it. Now. Immediately. Without hesitation. This is the single most important skill you can develop if you want to make a living from trading, and it's the skill that most people never learn. They learn everything else. They learn to read charts, to analyze fundamentals, to identify patterns. But they never learn to take a loss. And that's what kills them. Here's the thing about losses that most people don't understand. They're not the problem. Losses are normal. Losses are part of the business. If you take 10 trades, you might lose on 4 or 5 of them. That's just how it works. Nobody bats 1,000 in this game. The best traders in the world lose regularly, but they stay in business because they keep their losses small. They cut them quick. They don't let a small mistake turn into a catastrophe. The amateur trader, he thinks differently about losses. He takes a position, and it goes against him. Instead of getting out, he starts telling himself stories. The market's wrong. It's just a temporary pullback. It'll come back. Other traders don't see what he sees. He did his analysis, and he knows he's right, so he holds. He watches his loss get bigger. Maybe he even adds to the position, averaging down, throwing more money at a losing bet. And he keeps holding, waiting for the market to prove him right. But the market doesn't care about proving anyone right. The market just does what it does. And while he's waiting for vindication, his small loss becomes a big loss. His big loss becomes a disaster. And his disaster becomes the end of his trading career. I've seen it happen 1,000 times. Smart people, educated people, people who understand mathematics and logic, completely unable to admit they're wrong and take a loss. And you know what the irony is? If they'd just cut that loss when it was small, they could have gotten back in later if the market did turn. They could have preserved their capital. They could have lived to trade another day. But they couldn't do it. Their ego wouldn't let them. Their hope wouldn't let them. Their fear of being wrong was stronger than their desire to stay in business. You want to make a living from trading? Then you need to change how you think about being wrong. Being wrong isn't a character flaw. It's not a sign you're stupid or incompetent. It's information. The market is telling you something. Maybe your analysis was off. Maybe your timing was wrong. Maybe conditions changed. It doesn't matter why. What matters is that you're in a losing position, and every moment you stay in it, you are choosing to lose more money. Think of losses as the cost of doing business. If you owned a store, you'd have rent, utilities, employee wages. Those are expenses you accept because they're part of running the business. In trading, losses are or overhead. They're the price you pay for the opportunity to make money. A small loss is cheap overhead. A big loss is wasteful spending. And catastrophic losses? Those are you going out of business. The professional trader has a number in his head before he ever enters a trade. He knows exactly where he's wrong. Maybe it's 2% down. Maybe it's 5%. Whatever it is, when the market hits that level, he's out. No questions asked. No second guessing. No hoping. Exits the position, takes his loss, and moves on to the next opportunity. He knows something the amateur doesn't. His capital is his most precious asset, and protecting it is more important than being right on any single trade. There's a rhythm to the market that most traders never learn to hear. They think every day is the same, every week offers the same opportunities, every month is just another chance to make money. So they trade the same way all the time, same position sizes, same frequency, same aggressive approach, whether the market is trending strongly or chopping sideways in confusion. And they wonder why they make money for a while and then give it all back. They don't understand that the market has seasons just like nature, and you can't plant crops in winter and expect them to grow when conditions are right. When the market is in a strong trend with clear leadership and healthy breadth, that's when you need to press your advantage. That's when you should be trading larger positions. That's when you should be active, looking for setups, putting your capital to work. The market is practically handing out money during these periods, and the trader who recognizes this and acts on IT can make months' worth of profits in a few weeks. But you have to be there. You have to be ready. You have to be aggressive when aggression is called for. But then the market changes. Maybe it tops out and starts chopping. Maybe it breaks down and starts trending lower without clear opportunities on the long side. Maybe it just gets confused, whipsawing back and forth, shaking out positions in both directions. During these times, the market isn't giving away money anymore. It's taking it back. And if you keep trading the same way you did during the good times, you're going to be one of the people it takes it back from. This is where discipline becomes everything. When the market gets difficult, when your setups stop working, when you take 2 or 3 losses in a row, you need to recognize what's happening. The season has changed, and when the season changes, you need to change with it. You reduce your position sizes. You take fewer trades. You become more selective. Maybe you stop trading altogether and just watch, waiting for conditions to improve. This isn't giving up. This isn't being scared. This is being professional. This is understanding that preservation of capital during difficult times is just as important as making money during good times. Most traders can't do this. They think they always need to be active. They think if they're not trading, they're not working. They feel like they're missing out, like the market's going to run away without them. So they keep pushing during the difficult times, taking trades that don't meet their criteria, forcing setups that aren't there, trying to will the market into giving them opportunities. And they bleed. Slowly at RST, then faster. They give back the profits they made during the good times and often more. The professional trader sees things differently. He knows that trading isn't about being busy. It's about making money. And sometimes the best way to make money is to not lose it. When conditions are poor, sitting in cash is a position. Doing nothing is doing something. You're preserving your capital. You're staying fresh mentally. You're avoiding the frustration and emotional damage that comes from taking repeated losses in a difficult market, and you're positioning yourself to jump back in aggressively when conditions improve. Making a living from trading means understanding that your job isn't to trade every day. Your job is to make money over time. Some months you'll make a lot. Some months you'll make a little. Some months you might not trade much at all. And that's fine. That's normal. That's professional. The market will always be there. Your capital might not be if you don't learn when to push and when to back off. You can't make a living from trading with pocket change. I don't care how good you are, how smart your system is, or how many books you've read. If you're trying to pay your bills trading a $5,000 account, you're not a trader, you're a gambler. And the odds are stacked against you in a way that no amount of skill can overcome. This is a hard truth that nobody wants to hear, but it's a truth nonetheless. You need real capital to make a real living from this business. Let me explain why. Say you're a good trader. Say you can make 20% a year consistently, which is actually excellent performance. Most professionals would be thrilled with that kind of return. Now, if you have a $10,000 account and you make 20%, you've made $2,000 for the year. That's not a living. That's not even rent for most people. So what do most people do? They leverage up. They start taking bigger positions relative to their account size. They start swinging for the fences on every trade because they need to make more money. And that's when the account dies, when you're over-leveraged, when you're trading too big for your account size. Everything changes. A normal loss becomes a catastrophic loss. A small mistake wipes out weeks of gains. Your emotions take over because every trade matters too much. You can't think clearly. You can't execute your plan. You're trading from desperation, and desperation makes you do stupid things. You hold losers too long because you can't afford the loss. You take profits too quick because you need the win. You take trades you shouldn't take because you need to make money now. It's a death spiral, and it ends the same way every time. The professional trader, he's got enough capital that he can trade proper position sizes without over-leveraging. He can take a 2% loss on a trade and it doesn't affect his ability to eat dinner. He can sit in a winning position without sweating every little pullback, because he's not betting money he can't afford to lose. He can wait for the perfect setup because he doesn't need to make money today. This psychological freedom, this ability to trade without fear or desperation, it's worth more than any technical indicator or chart pattern you'll ever learn. And you can't have it without adequate capital. Here's another thing about capital that people don't think about: drawdowns. Every trader goes through losing periods. It doesn't matter how good you are. You'll have weeks or months where nothing works, where the market just grinds you down. If you're properly capitalized, you can weather these storms. You take your losses, you stay disciplined, you wait for conditions to improve, and you come back. But if you're undercapitalized, a normal drawdown can end your career. 3 or 4 losing trades in a row and you're done. Your account's too small to continue. You're out of business. So what does this mean practically? It means before you quit your job to trade, before you commit to making this your living, you need to build your capital base. Keep your job. Trade part-time. Save your money. Grow your account. Get yourself to a point where you can extract enough money to live on without over-leveraging. For most people, that means you need an account in the 6 figures, minimum, maybe more depending on your expenses and your lifestyle. I know that's not what people want to hear. They want to believe they can turn a small account into a fortune through sheer brilliance and hard work, and maybe 1 in 1,000 can do it. But for the rest, trying to make a living on inadequate capital is just a slow form of suicide. Build your stake first, then trade it properly. That's the path that actually works. Most people think trading is about action. They think it's about making decisions, executing trades, being involved in the market. They see trading as something you do, an activity that requires constant engagement. And that's why most people fail. Because the real skill in trading, the skill that separates the professionals from the amateurs, isn't action. It's inaction. It's the ability to sit on your hands when every instinct you have is screaming at you to do something. The market's always moving. There's always something happening. Stocks are breaking out, breaking down, bouncing, rolling over. The news is flowing constantly. Your screen is flashing with opportunity after opportunity, or what looks like opportunity. And inside you, there's this voice that keeps saying, you need to be involved. You need to have a position. You need to be making money. If you're not trading, you're not working. If you're not working, you're missing out. That voice, that urge to act, it'll destroy you if you listen to it. The truth is, most of the time, the right thing to do is nothing. Wait for your setup. Wait for the market to come to you. Wait for conditions to be right. Wait for the odds to be clearly in your favor. Most days, that perfect setup isn't there. Most days, the right trade doesn't exist. And on those days, the winning move is to sit in cash and do absolutely nothing. But that's torture for most people. Doing nothing feels like losing. It feels like you're being lazy, like you're not really a trader if you're not trading. I've watched traders take perfect positions that could have made them serious money, and ruin them through impatience. They get in at the right time. The setup is perfect. The trade starts working, and then what? They can't sit still. They start taking partial profits too early. They start second-guessing the position. They start watching every tick, every little movement. They get shaken out on normal volatility. Or worse, they get bored holding the winning position, and they start looking for the next trade. They want action. They want excitement. They want to feel like they're doing something. But the real money, the serious money, it comes from doing nothing once you're in the right position. It comes from sitting there, day after day, while the market does what you knew it would do. It comes from ignoring the noise, ignoring the fear, ignoring that voice that says you should take profits or adjust your position or do something, anything, to feel like you're in control. You're not in control. You never were. The market's in control. Your job is to recognize when you're on the right side of it and then get out of the way and let it work. The same thing applies to entering positions. You might see 50 potential trades in a week, 50 stocks that are moving, that look interesting, that might work out. But maybe only 5 of them really meet your criteria. Maybe only 5 of them have everything lined up just right. The amateur takes 20 trades because he can't stand to miss out. The professional takes 5 because he has the patience to wait for his pitch. And at the end of the year, the professionals made money, and the amateurs broken even or lost, and the amateur can't figure out why. He was so much more active. He worked so much harder. He was so much more engaged. Patience isn't passive. It's the hardest work you'll ever do in this business. Fighting your own nature, fighting the urge to act, fighting the fear of missing out, fighting the boredom, fighting the need to feel productive. That takes more discipline than anything else in trading. But if you can develop that patience, if you can learn to do nothing when nothing is the right thing to do, you'll have an edge that 90% of traders will never have. You can have all the knowledge in the world about markets and still fail at trading. You can understand chart patterns, volume analysis, sector rotation, market cycles, all of it. You can have studied every book, watched every video, learned every technique. And none of it will save you if you can't control yourself, because trading isn't won or lost based on what you know. It's won or lost based on what you do. And what you do is entirely dependent on your ability to execute your plan, when your emotions are screaming at you to do something else. Every trader has a plan when they're sitting in cash, when there's no money on the line, when it's all theoretical. In that calm state, they know exactly what they should do. They know where they'll enter. They know where they'll exit if they're wrong. They know how much they'll risk. They know they'll cut losses quickly and let winners run. It all makes perfect sense. It's all very logical. And then they put real money into the market and everything changes. Now there's fear. Fear of losing money. Fear of being wrong. Fear of missing out. Fear of giving back profits. And there's greed. Greed that makes you want to make back your losses on the next trade. Greed that makes you take profits too early because you want to lock in a win. Greed that makes you overtrade because you want to make more money faster. These emotions, they don't care about your plan. They don't care about logic. They're primitive, powerful forces that have been with humans for thousands of years, and they will overpower your intellect every single time unless you've trained yourself to resist them. The losing trader follows his emotions. When he takes a loss, he immediately wants to make it back, so he takes another trade without waiting for his setup. When he has a profit, fear takes over and he exits too early. When he sees a stock running without him, he chases it and buys at the worst possible time. When he's in a losing position, hope keeps him from cutting the loss. Everything he does is a reaction to emotion, not execution of a plan. And the market takes his money consistently and predictably because the market rewards discipline and punishes emotional trading. The winning trader, the one who makes a living from this business, he's not smarter, he's not luckier, he doesn't have better information or a secret system. What he has is discipline. He has the ability to follow his rules even when his emotions are telling him to break them. When he feels fear, he acknowledges it and then executes his plan anyway. When he feels greed, he recognizes it and sticks to his system. When every fiber of his being wants to hold a losing position just a little longer, he cuts it. When everything in him wants to take a quick profit, he stays in and lets it run. This discipline, it's not something you're born with. It's something you build through repetition and experience. You build it by following your rules even when it's uncomfortable. You build it by taking losses when you don't want to. You build it by sitting in winning positions when you're scared. You build it by doing nothing when you want to trade. Every time you override your emotions and follow your plan, you get a little stronger. Every time you give in to emotion, you get a little weaker. Making a living from trading comes down to this. Can you do what you know you should do consistently over time, regardless of how you feel? Can you be disciplined when discipline is boring? Can you be patient when patience is painful? Can you follow your rules when breaking them seems like it would feel so much better? If you can, you have a chance. If you can't, all the knowledge in the world won't help you.